Are you wondering how to choose the best investment property in or around Wollongong? Well, I'm here with Joanne Danckwardt of One Agency JD Property Agents. And Joanne, if we're looking for an investment property in the Wollongong municipality, what sort of things should we be considering?
It's really, really interesting because Wollongong is attracting quite a lot of investors from outside the area. I think it's because it's more affordable. It's such a beautiful, coastline as well. And also the mountains. We've got the best of both worlds here, so that is attracting a lot of people. So one of the biggest considerations is how much you want to pay. We have a variety of property types in the Illawarra, and in Wollongong you've got apartments, and then you have older homes, and then you have brand new homes, and there's quite a few duplexes that are going up, but we also have older apartments and we have new apartments, so there is a lot of choice. The one thing we don't have a lot of are villas though, so and not enough to meet demand. But you also have to consider, not only are you paying for the cost of the property, but you're also having to consider stamp duty, other costs. So we've got stamp duty, we've got legal fees, we've got reports, sometimes strata reports, and sometimes they are pest and building reports. So we have reports that will need to be paid for as well. So there are quite a few things that you need to consider when you're buying a property. Yes, like we said, stamp duty is a pretty big one, but also conveyancing costs as well. So you've got to look to aim for a strong return, on the money that you're putting in. So a strong weekly return is pretty important to have. What that means, to give you an example, if you're going to pay $1 million for a home, if you were to get $900 a week rent from that home, that would be what we consider a very strong return. You don't normally get that. If you're spending, on the other hand, $1 million to buy a home and you're getting $400 a week, that is a pretty weak return. So that's the difference between a strong investment and a weaker investment. However, I must say that there can be good capital growth, possibly, with the one that's $1 million and only getting 400, because there is an opportunity. It's in a perfect location, but it's a really dump of a house. So you're not getting the weekly rent, but you'll get great capital growth because it's opposite the beach, and so that land is so important. It's not so much about the house, so you will get growth on a property like that. Maintenance costs, you have to consider the maintenance cost. Higher rent in good condition, that requires very minimal maintenance. But like we said about our $400 a week rent place, is going to be continually having problems and things that need to be done because the house is not of a quality that will, attract the best possible tenant and also the best possible rental amount because of what it is. Maintenance costs, they can be quite significant if the property requires a lot of work. You just got to balance your costs with your income. Finding that sweet spot is super important. Balancing the costs with your income, that's the main thing. And knowing what that looks like for you, because it's an individual thing, really, and it gets back to what your income is, etc. How to equate that balance is looking at your yield. What your rental yield is. That's calculated by the annual rent, and that's divided by the property's value, and it's expressed as a percentage. So you can see what the yield is, if you've got a rough idea on what the value of the property is. So, if you've got $1 million property and you've got $900 a week rent, your yield is, 4.68%, something like that. So, it's typical. Just it really depends. It indicates a good return or not a good return. So capital growth is important too. And then you've got to be thinking about the capital growth. Is the property likely to increase in value or not?
Yeah.
you know, they don't always go up, like we said before. And also location, that really is very important, because some places and some locations will improve in value quicker than other locations. So when you're looking to purchase, you know, is that close to the water? Everybody wants to be close to the water, so you know, that would possibly mean that it will increase in value at a higher rate than something that is next to a freeway. You know, that's not going to increase in value at the same sort of rate. Also, transport hubs, you know, sometimes that they can get a better return because people want to be able to get onto that fast train quickly. So that comes into it. And amenities, you know, super important to have what you need around you. Like in Fairy Meadow, we have, you know, Coles, Woolworths, Aldi, you know, we have doctors, we have podiatrists, we have, you know, great cafes, restaurants. So all the amenities are around here and people want to live here. So that helps sustain the rents that you'll achieve. And you have to think about your long-term goals as well. Aiming for immediate rental income. Long-term capital appreciation. Getting that, and you know, hopefully combining it all. So you have that. Some other things that you might want to think about. We touched on location, demand. You know what the demand is in the location. Very, very important. We touched on it as well with the amenities, and the infrastructure with trains, etc. And the last one, which is super important, not everybody thinks about this one, is vacancy rates. Today, there's no point in investing and buying a property and expecting to get a return and finding out it takes 6 months to find a tenant.
And that's
a problem, you know. That can happen sometimes in country areas. You know, the demand's not there in the country areas, so you need to be mindful, you know, even if you were to go to a few open houses for rentals of a similar property and just see how many people are there. And after a while you'll get to understand whether the rent that they're asking for is reasonable or it's not. So it gives you a really good understanding of when you're looking at buying something what you could possibly get. And make sure you do the research yourself. Just don't rely on what the agent might tell you the rent could possibly be. Make sure that you just do a little bit of investigating yourself just to feel comfortable, because you're responsible for it all at the end of the day.
That's good research tips there. Fantastic. Look, if you've got any other questions around this, please get in contact with Joanne here at One Agency JD Property Agents in Fairy Meadow. Thank you so much for watching the video, and we'll see you in the next video.